All right, so you always hear me talking about, market structure and how important it is. It's very important because the thing is you need to understand which way to trade and get the direction right. You do not want to be trying to trade any particular market, whether it's futures, forex, or options, if the market is bearish to the downside and you're looking to actually go long. I mean, you can count on trend trade, but you have to know exactly what you're doing. And I tell, beginner traders, those that are starting off and trying to get their feet wet and understand, how to trade the correct way, especially when it comes to supply and demand, that the premises, the basis is understanding the overall structure of the market. Like today, I was able to capitalize and make $1,800 simply following the direction of the market, pull back to key areas of supply and demand, because that's the strategy and how I trade. If you want to know more about the strategy as a whole and understanding the cornerstone, the blueprint to how I personally trade, like most people do, you may want to think about becoming an elite or an ultra elite supporter to the channel. It's very, very, very inexpensive, but you receive so much valuable content surrounding personally how I trade. And I'll go into more detail towards the end of the video, but let's talk about right now how I was able to capitalize using order flow and coupled with market structure, which I do on a daily basis, because that's what we're looking at, being able to determine by looking at the chart what we see happening prior to versus, what's going on in the market right now. The charts don't lie. They show you what is a picture representation of what the market has done and what it's trying to actually do. So if we look at the flow of the market, say for example today, and I'm going to show you a beautiful setup that I took going short that I posted over on our Discord community. And if you're not a member of the Discord, it is free currently to actually join. The link is down in the description portion of the video. Click it. It's the first link, and you can come over and join us on the trading floor. That's where I, myself, and other fellow members that are part of the Discord share their trades. But I'll go in and I'll break mine down so that you, as anyone that's interested in becoming an elite or an ultra elite member, and you're on that path, you're on that journey of trying to understand the correct way or a system or strategy how to trade supply and demand, that's why I break my trades down and give you so much valuable insight in regards to how I trade, what I was looking at when I took those trades, just a full rundown, okay, including market structure. All right, so I'll go into more detail about that towards the end, like I said. But look, first and foremost, what you got to get correct is the sentiment. Are we moving to the upside or are we moving to the downside? If we're moving to the downside, like I always say, push down, pull back, breaking structure. This is a reversal right here for all those that don't know. And then we broke back to the upside, taking out this area of structure. Now, when we start breaking back above and taking out structure, for example, then I'm a little bit, kind of curious. Okay, what are they trying to do? They just took out a low here, right below this area here, and broke structure. But now they're going back up and re-breaking structure back to the upside. This is where you want to stay out of the market until they either are continuously swinging to the upside and breaking structure higher and possibly take out this major high, or wait for them to break this low, which they did. After taking that area out, they come back down here. They run this low right here. They push lower, taking out these buyers right here, and they break structure lower. Again, they do the same thing here. Low, lower highs. Okay, they come down, run these buyers right here to the downside, grabbing liquidity and breaking more structure. And that's what we see with the flow of the market the last several days. That's all they've been doing. Breaking structure, breaking structure, breaking structure, breaking more structure, pull back, breaking more structure, pull back, breaking more structure. So this is the reason why when I saw today, this was an opportunity to go short right here. Okay. I don't take my trades off of a higher base chart. I would scale down to like a lower range chart, my 24 entry chart. And I talk about that. That's what I'm saying. In becoming an elite, an ultra elite supporter, you will grasp and understand if you watch the video content and becoming one of those supporters and members of that program, you'll understand, what I'm looking for and why I place the entries in the way I do, as well as to where to place your stop loss and profit target areas. Okay, I talk about that, and I also tell you, great strategies on how to actually stay in a trade longer, okay, to maximize your profit. But look, this right here, if we're talking about order flow, we could see the flow of the market, and we could see the market prior to where buyers were engaged in taking the market higher, like, right here, pull back right here. Then they break structure higher. Buyers were in full control here when they broke structure here. Makes a high, higher low. Okay, buyer stepped in, pull back, more buyers stepped in. Let's blow this up a little bit so you can see it. Right here, it came back. Okay, retrace, pushed up, buyers, more buyers stepped in, they broke structure here, and then this is where the sellers gain control right here, coming to the downside, right, and breaking through areas of structure below. So at this point, we get a change in the market direction. You may be looking to say, okay, maybe I need to look for opportunities to go short. Well, this was a nice pullback right here. Okay, they did break some area of structure below these lows and these lows, but then they came back around and buyers stepped right back into the market. Push up, pull back, more buyers stepped in. Push up, pull back, more buyers stepped in. So there was a lot of support being built right here. They break structure higher. Then they come back to the same area of support. And, this is where the banks are really trying to, a floor is being formed right here. A lot of liquidity is being built right here. Buyers are engaged in the market right here. And typically what you'll see is that kind of taking place here on the volume too, as the market is, as orders are being placed, contracts are entering the market. What you will see is transactions taking place here, and the volume profile will increase, where you start to have these little peaks. Okay, all right. Even though this is more of a low volume area, up in this area, we do have peaks, low volume, peaks, low volume. But this is still an area of support where volume is increasing each time the market comes down and tests this area that's low right here. So these were a lot of buy orders that took place right here, and the market pushed higher. Okay. So when I see things like that taking place, and the markets continue to run to the downside, as we start to transition and move lower, the market makes lows, lower highs, lower lows. As it's approaching and breaking structure lower, I'm looking at key areas like this right here, okay? Especially where we have a floor resting at, or an area of, support where a lot of buying activity took place right here, okay? Same thing like right here, the market pushed up, pulled back, we broke higher, we came back right here, buyers stepped into the market right there, right? So they came in. They ran to the downside, the market ran to the downside, they were taken out right here, but, and then, the market pushes up. So even right here, we got a buyer stepped in, pushed up, came back, more buyers stepped in right here to continue pushing the market higher, which eventually broke that area of structure. So at some point, we start to see where support is being built in the sense of transacted buy orders entering the market, and the market comes down because these are areas where liquidity to be ran. Pretty much buyers have positions here. Either two things are taking place here. We have either buyers taking profit to get out of the trade, and if not, then they got ran, they became liquidity. Same thing right here, like today. This is what I want to talk about, because as the market was moving lower, I saw this floor right here from August the 12th, where we had all this support built up right here, a lot of buying activity, and these could have been some of the same as the market was coming back down. Buyers that were engaged in the market right here, they started to, as the market started folding, they started, bailing out, jumping ship to get out of their trades, to kind of cover themselves so they don't get stopped out and become liquidity at that point. The market sees that right there, and it wants to kind of, either bounce off of that, which it did. It came back down here, rejected it. Okay, when it hit this area here, this area of support. So then there was more buying activity that took place here, transactions, and you can see this little volume peak right here. So this tells you in the volume profile, this is a history of if you look across here, a lot of buying taking place right here. All right, and it could be coupled with some selling activity as well. But if you look at this area right here, a lot of buying activity took place. So this becomes an area of support, but not only as an area of support, but an area where historically speaking, a lot of transactions took place on the buy side, buy orders, and it becomes an area where interest lies of taking out liquidity. This is a major liquidity zone or level right here. And as the market pulled back right here, if we're able to find an opportunity to go short when it pulled back to this key area of supply right here, you could have taken the market on down. They break through this area of liquidity. They come back right here again. A little bit more buying activity here, and then they come down there and break to the area there, that support area, which is, they run it's liquidity. These are lows right here. Each time it comes down, it's creating, it's buy orders are stacking up to the upside here, creating this massive area of support and liquidity right there. So they run that area to the downside, right here. Then as they're running to the downside, I'm still looking to the left-hand side of the chart, and I see where there's more liquidity right here. There's more buying activity right here at this area, which is at the top edge of this high volume area. So again, the market started building up volume up in this area right here towards the upper portion of it. And as it's doing that, you can see, okay, it pulls back. So when it came back there, it rejected this area after rejecting it prior to on August the 8th, once, twice, 3 times here. So you got a lot of buying activity right there, right? Some buyers stepped into the market here. Okay. And then what happens is it's like, okay, the market's going to do its thing. This becomes a significant area or level where liquidity rests at with all these, basically similar lows or equal lows right there. This is where I saw that and I said, okay, I'm looking at order flow. I'm looking at what's taking place historically speaking and looking at this, the floors, meaning areas of support where liquidity can be ran at, where buyers were engaged at. So again, these were buyers that probably were still in their positions, and as the market started retracing back, at some point they got out to take profit, and more than likely, hopefully they didn't wait way down here to take profit. But this becomes an area, and if anyone that stayed into that, then you got railroaded and you became liquidity. All right, so I'm looking for at that point there when I see this kind of order flow history taking place here just by basically looking at the chart. And cumulative delta is a good tool to use as well. I don't talk a lot about that, and I kind of added it to my chart. But those that trade cumulative delta, those are the real-time market orders hitting the markets, whether on the buy side or the bid side. So that's what you're going to see are real-time orders hitting as buying activity takes or enters the market or selling activity enters the market. So right here, when the market came down, you'll see a lot of activity where this may have been, right here, let's blow this up a little bit, where it may have been, negative whatever on the delta, it start to spike up. That means buying activity was coming into the market and it pushed the market higher. But again, this blue line here represents, and looking to the left, we've got buying activity, a previous buying activity, which is support right here. And the more that the market engages in hitting a level, whether it's support or resistance, and it starts bouncing off it multiple times, either sell orders are stacking up, buy orders are stacking up, that equates to be liquidity that the market is going to want to take it out at some point. Okay, there's a lot of liquidity resting right in this area on the top end of this high volume area. So we're looking for the market to push lower and take out that liquidity. So that's what I was engaged in or looking at when the market retraced back to this demand area. Again, I'm trading supply and demand, but I'm looking at order flow as well, historically speaking, to see, do we have support levels or zones being, basically populated or created? And you'll see that again on the volume profile where you have at key areas where support is being created. Okay, again, like right here, you see it historically, the volume profile here. You got areas right here. You start to see those mounds being built, and that tells you that, okay, these are historical transactions that took place at key areas to where the market, in this case here, where it was buying activity, the market's going to take that out and run it as a means of liquidity. So in my mind, I'm thinking that as the market's retracing back to a key area of high probability supply, I'm looking for an opportunity to go short, because if they tap that area multiple times and they are just stacking orders right there, or there's a lot of buying activity, the market's going to want to take out that area of anyone who hasn't jumped ship and run areas of liquidity. And so that was, basically betting on that to happen. So I got into a trade here to go short, and I was able to capitalize, off of this trade here and another small trade that I took $1,800 on the day. But what I'm trying to say is the order flow is extremely, important. A lot of people turn to like the cumulative delta because they like to look at the market orders hitting at key levels or zones. It could be areas of support or resistance, and they turn to it to see, what's going to happen when the market taps back into the area where a massive level, of support resistance is actually at. So I took my play. Again, I'm using support and resistance as means of areas I'm looking at. Okay, this is definitely liquidity sitting there because of the market hitting those areas multiple times. But I'm still trading supply and demand. And when the market shows weakness at a supply area, I'm looking for that area of liquidity, which was, historically transactions that took place by orders over a period of time. And we're talking about several days. I'm looking for that to be taken out and ran, to the downside. Okay. So that's how I study. That's how I look at in regards to the chart when it comes to order flow. And you can use cumulative delta to kind of give you some insight to, the pressure within the market, or on the buy side or the sell side once the market taps into, whatever zone you're looking at, or whatever strategy you're using. Again, I'm trading supply and demand, but I'm looking to see what's taking place historically. And, to me, this is order flow at its best, to be able to see it on the charts. What's took place here? What's right here? A lot of buying activity, loads of buying activity right here, across the board. The market's going to want to run those areas and grab those areas of liquidity. Just like let's say like maybe down here, let's see, right here. There's buying activity right here. The market comes back, buying right here. Okay, so at some point the market may want to come down here. They'll probably test this area where this low is at. It may bounce off of it, and then at some point it's going to come down and break through it and probably race right through this low volume area to test areas below where there's higher volume at, because that means that more likely there are areas of what? Areas where the market was, where there was probably a lot of buying activity back to the upside, that the market might want to react off of. And again, those areas could become liquidity and ran through as well. But the market tends and loves to move from high volume areas, high volume areas to low volume areas, and moves quickly through them to test areas of high volume kind of below. You got to look at these high volume areas as nodes or areas where transactions took place on the buy or the sell side. This here, historically speaking, and knowing that these were where orders or contracts were participants into the market and transactions took place. Okay, and the more they build up in this area, and let's say they may want to reject off of this, okay, possibly speaking, and then push to a low volume area and back up to another high volume area, and then eventually they're going to come down and take this area back out. Okay, so you have to understand the flow of the market, and that's how I kind of read order flow looking at the charts. Again, you can use tools like cumulative delta. You hear me talk about like indicators, not placing a lot of emphasis on them. Well, cumulative delta is a little different because it's actually, these are real-time orders and looking at what's going on here, both on market, orders buy and on the sell side too. So you can see a representation of what the pressure looks like when the market is at a key area, or what it looks like when the market is moving. It's moving with price. Okay. Other indicators like EMAs and SMAs, I'm not saying that it may not help you out as far as possibly help you out kind of trying to stay into a trade a little longer. But one thing for sure is that they're lagging behind price. They're not moving at the same or real time with price like cumulative delta is. All right. I just want to throw that out there, but that's how I look at order flow from a picture representation. Historically speaking, I can see what's taking place prior to, and I can, gauge my trades based on what took place prior to as well. But I want to share that with you guys. Now, if you're interested in becoming an elite or an ultra elite supporter, okay, again, let me tell you this right now. To become an elite supporter, what you receive are the trade breakdowns. I'm talking about tons of video content to where I break down trades after trades after trades, so that you can understand and grasp an understanding of this supply and demand strategy, how I personally trade, okay? It may be for you, it may not. I'm telling you right now, if you come over and join the Discord, you'll see that there are similar individuals that are part of our community that trade similar to how I trade using range charts, and they are pretty successful doing so. Some of them are really successful doing it. There's also a testimonial section there to where you can see what people or traders who have passed, those that trade prop firms and or evaluation accounts or challenges and are doing well themselves. So the system works. It's all about putting in the time to understand the simple strategy, because it's not complex. It's all using a top-down analysis, a higher base chart, range chart, and a lower base range chart to look for from the higher base chart. That's what I mark my charts up from, and then I scale down to a lower base chart to look for opportunities to actually trade. So let me show you right quick. This trade that I took right here, it wasn't off the 120, which is my higher range chart. I scaled down to, for example, let's go to that setup right here, to when the market tapped into, let's do this right quick so you understand for all those that are new individuals watching. You'll see that I just put this across all charts. So that higher range, this blue box here, the big one, that's from the 120 higher range chart. I'll mark my higher range zones first. High probability supply setup. And then I'm looking for weakness in forms of structure being broken to the downside. Okay. And you can also kind of look at that from the delta as well. And then so what I'm looking for is where the market's breaking structure lower, we have weakness. Like right here, you see where it made a high at, it came down and made a low. And then it comes up here. We do get a wick above this area, but because we didn't close above it, we start to get lower highs coming to the downside. We broke this area of structure right here. Then I'll be looking for a key pullback to this area of supply right here to move into the direction with the higher range chart. And this is where I enter the trade, somewhere in this area right here. Okay, it taps into the supply. So we got 120 range supply, higher range. Okay, it pulls into it. It starts to create lower highs coming down and breaking structure, and it creates a newly formed area of supply on the lower range chart, which is also on the inside of the higher range supply area. I'm going to go short from there because it's showing weakness to where it doesn't want to continue. Like right here, as we're tracing back to the higher range zone, highs, higher lows. No weakness yet, But the first time it comes down here and makes these lower highs is where that's the first signal that the market's probably trying to go lower, and we're tapping into a higher range zone. Okay, and we have liquidity right below us. You have to think in terms of all that and allow it to equate together. So that's why, again, if you want to become an elite member, I go through trade breakdowns so you grasp an understanding of the concept. Also profit target areas, stop loss areas, where to place your stops at. You also receive the video playlist and a great video that I covered surrounding market structure, which is about 45-50 minutes. Now, if you want to become an ultra elite, which is one step up, that's where you receive everything I just discussed, plus my live recorded trading sessions and market recap videos when I post those. But yeah, I mean, again, you can join either tier, the elite or the ultra elite. The link is down in the description portion of the video. It's titled Ultra Elite Supporter. Once you click on that, there'll be 3 tiers that pop up. Choose either the elite or the ultra elite, depending on which tier you want to actually join and become a member of. Very inexpensive. When you click it, you're going to see that you'll see the price points there, the price levels. That's per month. It's like pennies on the dollar a day. I know a lot of people probably say that, you know, you're basically giving this away for free. Yeah, I mean, it is, but I'm not here to also try to, you know, rob anybody's pockets in a sense. Okay, I don't have a course to sell or mentorship program. I'm just sharing with you how I trade, and you do with what you want to do with it. But the education, as far as the material through the material content that I'm actually posting, hopefully it helps someone else out. Okay, I'm all about and believe that, you know, knowledge is wealth, and sharing knowledge helps others get ahead. Okay, if that makes sense. All right, but outside of that, guys, again, if you want to become a elite or an ultra elite supporter, the link is right down in the description portion of the video. You can join. But yeah, if you're not a current subscriber, I'm going to say this now. Please take the time to go ahead and click that sub button, become part of the community right now. Make sure to turn your post notifications on so you do not miss any of the uploaded content. And last but not least, drop me a thumbs up, a like on the video, and for every video that you watch if you found value in today's video. Okay, take care. I'll see everyone in the next video.